Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Gabriel, good to have you on the show today this afternoon.
Hey, Brian, our background is the same.
Yeah, absolutely. Except that yours is the real active background in Marina Bay.
Indeed. Let me just show you then.
So, Gabriel, before I get your insights, let's take a look at how markets in the region have been performing. We've got Bursa Malaysia, which is at 1,553.9. It's down 1.36%. SGX is at 3,112.74. It's up 0.09%. Across the region, we've got the Nikkei, which is at 28,314.18. It's up 0.77%. Shanghai Composite is at 3,491.04. It's up. It's down 0.45%. The Hang Seng is at 28,391.89. It's down 0.21%. ASX 200 is pretty flat at 7,222.1. It's up 0.04%. And rounding off the numbers, we've got the Kospi, which is at 3,154.78. It's down 0.24%. But I must add that also the Taiwan's Telex is up 1%. Now, Gabriel, what's your view? The market signals across the region are very, very mixed. Why is that?
Indeed, Brian, I think it's actually very mixed, as what you have rightfully pointed out. I think essentially what emanated from the US was the fact that, the pullback from the Dow S&P at the 4,200 level has not reached what we call a correction level. It's like down 5% and then it started to move up again. So it's going through this uncertainty, and this uncertainty was, on the one hand, worries about inflation. Of course, the other critics of the inflation will say that, look, there's nothing to worry about inflation because it's been more than 20 years since the US hit inflation rate of 2%. So as we actually go deeper into the summer, it's fairly clear that the critics are actually quite mixed, and the markets also has seen the end of the second quarter results, which means that they're looking for a new catalyst.
Now, I want to ask you about Chinese stocks, where shares of Tencent in Hong Kong dropped about 2.8%. Now, this is despite posting a 65% surge in its quarterly profit. What is your view on that, and also the outlook for earnings of the rest of the Chinese tech sector?
Right, Brian. In fact, if you look at its top line, revenue growth was 25%. And the bottom line, as you say, it's basically smashed earnings. But the only thing is that 69% was due to a 19 billion incorporation of profits from the gain from the various investments. As you know, that Tencent actually has investments of more than $3 billion US in more than 800 companies. So for this particular quarter, to book in something like $3 billion US in terms of the profit gains. So on an organic basis, essentially the profits actually grew 22%, something that the market's a little bit not too happy about because they were hoping that the bottom line would have exceeded the top line, on a core operations basis.
Now, what's your view on JD and Baidu?
Essentially for GD is they're going into electric car. So it's an area that's fighting with SAIC, BAIC, and the rest of the other motor players like Great Wall. I think basically the first to market, as well as actually the technological progress on the EVs would put anybody that will be the first mover advantage, to great advantage. And for Baidu itself, it's very interesting because Baidu, like Tencent, when the results came out, that the share price actually sold off. In fact, at its bottom, Baidu in the US market value, actually was at 177 rather. It's actually down from its high of 354. Guess what, Brian? Just 4 months ago, so it's almost like 40% down when actually results are out. And when I did an analysis, I actually noticed that the cash that they have is about running at 41% of its market cap. Of course, you may say that they just raised money, 3 billion from its Hong Kong listing. But the fact is that it is went strong. So if you're into AI, you're into autonomous driving, then Baidu is the stock to be looking out for.
And then what's your outlook for the rest of the Chinese tech sector in terms of their earnings coming up?
I would say that essentially it's very mixed because the Chinese tech sector is really, really very wide. So the major ones like Alibaba, has announced, they have actually mentioned that essentially any incremental profit is going to be channeled into some social good, which is basically what the market interpretation that, it means that earnings growth for this current year will actually slow down. Exactly what Tencent actually mentioned. So, many of us would actually interpret it as part of the social obligation. But guess what? If they do this social obligation and they get out without being fined heavily for other antitrust issues, I think it's actually a counterbalance check. So I'm not that pessimistic because of this omnipresent fear which continue to have gripped this Chinese tech companies.
So Gabriel, you were waiting, and in our previous shows, you have in fact forecast and then bought on dips. Where are you putting your money to work right now?
Well, if the stock, for example, now in Hong Kong is at trading at 585, if it goes down to the 570 level, I think that is the level in which I will start actually be nibbling in, because at 570 it ranks the company at 33 times PE on an earnings per share growth of something in the region of 28 to 32% for this particular year. But if I'm actually a long-term investor, so when I look at this earnings profile, I'm very confident that Tencent will be able to double its earnings as well as revenue in the next 4 years, as what they have done so in the last 4 years.
Now, Gabriel, thank you very much for coming on the show, and enjoy the rest of your job.
Thanks, Brian. It's going to rain here, so take care.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversation. Please subscribe and like our various platforms on LinkedIn and Facebook. Thank you very much for tuning in.